Hey everyone, welcome to School Dropout's Advice. Today we will talk about what you should buy with your stimulus check of $1,400 and how much money it will make you when you would invest it today for your retirement. Let's make an example here. We are starting with $1,250 in investment today. We will add another $130 every month with a 15% return each year, and we do this for 30 years. We will have over $1,009,000 US. You might ask me why I only put $1,250 for the calculation and not $1,400. I will tell you this at a later point in the video. Before we get into more details, please subscribe to my channel, share or like my video. Videos like this take a long time for research, scripting, shooting and editing. You will help me and my channel out a lot. So do you understand that this $1,250 and just $130 per month can make you a millionaire when you retire? Your portfolio will be able to generate 15% easily per year on average. I will show you how you can build a portfolio making you 15% easily every year. The SP 500 makes close to 10% and got many obsolete companies in their index. Should I show you something really unique? If you just change 3% more in the rate of return and pump it up to 18% instead of our conservative 15%, you will receive this number, 2.1 million. You make more than double your investment when your average return is just 3% higher. Most people cannot imagine the change in the numbers by a small percentage. It's so hard for our brain to process the numbers because we cannot calculate interest on interest. From this graph, our starting amount is $1,250. Our total contribution over 30 years is only $46,800. This is less than a car which many of us are leasing or financing. So maybe you might think now to drive a less expensive car and put $130 each month in your portfolio, because you see that you will make $961,403 just in interest. The biggest amount you make is at the end. You see how the yellow part of the graph gets bigger and bigger. Your investment is not noticeable in the first 15 years, but it gains more and more momentum. The reason why Warren Buffett is so rich is not just because he is brilliant, but because he is like 100 years old and has invested over 80 years. So in 30 years, you will retire as a millionaire because you decided to drive a car which costs you around $7,300 less than what you would normally buy. Let me show you this. You see that $7,300 equals to $132 US. This means if your car costs you $7,300 less, you will have extra savings for you to retire as a millionaire. But let me show you another fact which many people are not considering. Let me show you the table of the numbers so that you can get the feeling here. You see in the column of total interest earned per year, and I agree with you that this is not getting interesting in the first 10 to 15 years. But let me explain to you one thing you might not have considered. Let's say you want to retire in 15 years, which is in 2036. You see that you would get $15,962 per year. This is not really an amount you can retire from, but considering you can always use this nearly $16,000 US each year to live from, it's not bad, since your total contribution is only $24,960 and you can get a lifelong nearly $16,000 each year. You would also have around $100,000 in the bank account as an emergency. We can agree that these are not exciting aims, but if we have the discipline and can wait another 15 years and we retire in 30 years, then in 2050 we see that our yearly interest will be $139,681 per year. This means you can retire in a very different way. $16,000 after 15 years and $140,000 after 30 years is so different. This means you can live off the interest alone every year, and you have $868,000 in your bank account as a backup. I hope you understand the power of investing now. Everyone can retire as a millionaire. All you need is to invest continuously. You might think what a difference it would make when you had invested the $150 I told you. Let me show you the numbers. You would have around $13,000 more after 30 years, and you will generate around $2,000 more when you retire every year. So you might see how much a difference this $150 does. Actually, give me 1 minute. I have to make a phone call here. Hi, I made a reservation for my girlfriend's birthday this Wednesday. Yeah, I want to cancel it. The reason for the cancellation? I got the birthday wrong. Yeah, her birthday is in 30 years. Yeah, okay, fine. Okay everyone, I hope that you take your time to play with that calculator at smartasset.com and see what is realistic for you. Now let me tell you what stocks I would buy. Most of us has received the stimulus of $1,400, and if you're in the lucky position, you don't need to spend that money on bills and groceries. You can think about starting building a small portfolio with it. I will give you a blueprint which you can use to build a stock portfolio. So let's get started. I would suggest that we break our portfolio into 3 different tiers. Tier 1 consists of stocks which are safe bets for the future, fundamentally strong, proven over time, and got a good potential for extra growth. Tier 1 is medium to mostly large cap stocks and seems boring for many traders and young investors, but they are super safe. Tier 2 consists of stocks with a medium to large market cap with at least break-even financials, fair evaluation, and good to excellent growth potentials. Tier 3 are growth stocks which are innovative companies who are investing in the future, losing money at the moment but are trying to control the market shares today to take the future's profit. Now that I have defined the 3 tiers, we need to talk about how much you should distribute the money in those 3 tiers. I would suggest $550 will go into tier 1, tier 2 should receive $350, and tier 3 should receive $350 as well. You might notice this is only $1,250. We still have the $150. I know, and I will tell you later what you should do with the $150. In each tier, I recommend 2 to 3 stocks at most. So in the end, you should have 6 to 9 stocks. I don't want you to be in like 20 stocks, but with all low amounts. You would just have them so you can say you have them. But if you want to invest, you should build a position in them and hold them over time. You can later expand your portfolio to 20 to 30 stocks, but the more stocks you have, the more work you have to do. And chances are big you are not doing your job and your portfolio becomes underperforming. By the way, if you have no brokerage account, I can recommend you Webull, where you can get 2 free stocks absolutely for free, which value from $12 to $1,850 per share. The good thing about Webull is you can trade in the pre-market and aftermarket, and you can be one of the first who buys or sells a share before the big mass does. So this is definitely an advantage. At the moment, they also help you to transfer your brokerage account if you need to. They will pay you up to $200 for transferring to their brokerage. You can use my link below in the description to register. So let us start investing. Now let me tell you what you should buy for $550. We will try to touch different categories, so we are not just investing in one category like EV resource chain. For tier 1, I always recommend Panasonic in this category. It's a company with a long history, cheap evaluation at the moment, and got a bright future with the EV battery development. You might know that Panasonic is a partner of Tesla's battery and now also with Toyota. Toyota sold the most cars in 2020. So there's a lot of potential for Panasonic. If you want to know more about Panasonic, please watch my Panasonic video up here or in the description below. Another potential candidate is Nvidia. I know the stock costs $533 at the moment of recording. But with Webull, you can also buy fractions of shares. Nvidia has an absolutely bright future and is already well proven and has a strong fundamentals. Even if we pay a premium for the stock, this stock is worth holding for at least the next 20 years. No matter in AI, autonomous driving, blockchain, cryptocurrency mining, big data, clouds, drones or space travel. They are part of every major development. Apple, Microsoft, Facebook, Walmart, Google and Amazon stocks are always a safe bet in this category. So I suggest you pick 2 to 3 stocks out of this category. Now we are choosing our stocks in category number 2. I like Rocket Company, which had a bomb earning release which was surprising to everyone. They had over 948% in profit growth and won't go away anytime soon. You can watch my Rocket Company video up here and in the description below. The stock did spike to $40 per stock, but the short sellers doubled down and Rocket is one of the stocks which get shorted a lot. It's just a matter of time. People will invest more money in the stock and a short squeeze explodes these stocks to new heights. Like GameStop and AMC, Rocket companies can be the next candidate where a short squeeze will happen. But unlike AMC and GameStop, Rocket companies got great fundamentals. For this category, I would also choose Albermarle, a lithium mining company. We all know that the new energy source of the 21st century will be batteries, and batteries will need lithium. Lithium prices are already rising and the supply shortage will most likely hit in 2025 when all car makers focus on electric vehicles. You can watch my Albermarle video up here and in the description below. You can also choose recovery stocks in this category like Carnival Cruise, Royal Caribbean, MGM and Caesars Entertainment. If you want to invest in airlines, I would suggest you to buy Air Canada. Canada has less competition than the US and they got an awesome CEO and fundamentals. I would however not invest in retail, even you will see them gaining at stock prices. I can tell you that for the short term, we will see recovery stocks gaining more than tech stocks. But remember, the recovery stocks are growing slower in the future, but this is okay. People will always want to make vacations on cruises or gamble in Vegas, so those are safe bets. Even the industry needs to keep up with innovation. My second category consists of stocks which are doing good in the old world and are not getting replaced anytime soon. If you like to focus more on tech stocks or other exciting stocks, you can invest in Palantir, Pinterest, Adobe, Unity, DocuSign, Netflix, Square, PayPal, Zillow or Maxell. I have all the videos which you can find on my channel. Tier 3 will consist of the stocks most people are excited about. If you follow my channel, we can name Ehang, Virgin Galactic, QuantumScape, Palantir, NIO, Tesla, Snowflake, Bitcoin and Ethereum as an example. You might argue with me now, Tesla is a large cap company already. You are right. But I think Tesla remains volatile. Tesla is the king of EV cars now, but now more and more competitions are entering the market, and Tesla needs to prove that they can defend their ground and innovate in the tech and solar sector and not getting stuck in making cars. I also mentioned Bitcoin and Ethereum because I think blockchain and cryptocurrency will play a key role and become the second stock market for people to invest in. I tried to build you a portfolio with these 3 tiers, which should do good in most market circumstances. You have big traditional companies in category 1 that are so strong that money will always flow into them for value storage and inflation protection. So if the market is crashing, people will invest more in them, and as long as you keep your shares, you will do well even in a market crash or in a recession. In tier number 2, you have more traditional companies recovering from the pandemic and should generate a nice profit. They are pretty safe to invest in because entertainment, fintech, and software increasing productivity go nowhere. A category I would not touch is retail and banking. The old banking system is obsolete. More young people got Venmo, Cash App, PayPal, and other electronic accounts than a traditional bank account at a conventional bank like Chase or Wells Fargo. In tier 3, we have all the exciting industry disrupting stocks and the potential multi-bagger stocks. I know most of us want to invest our money in this category, but I think we saw in the last 2 weeks in that shake off that it can be scary to just invest in this single category. If you got diamond hands, you should invest more in tier 3, but I know many will panic sell. It's also mentally so draining when you see red for 2 weeks. I have a decent size of recovery and non-tech stocks in my portfolio, so that I would see some nice gains even at the shake off. If you want to see green most of the time, I recommend you to build a portfolio close to the blueprint I gave you. You remembered we had $150 left. With that money, I want you to spend it. It can be in a restaurant. It can be anything you want. The reason is the money has to circulate. With the circulation, you are helping people out who are not investing. You will help your local restaurant or other businesses which need those circulating money to stay afloat and pay their staff and rent. Now you have an idea what I would do with the stimulus money if I can invest it. I hope you learned that this stimulus money could help you retire as a millionaire with $140,000 each year to spend when you add little savings each month into your investment account. Anyways, for legal reasons, I have to say I'm not a financial advisor, so remember, your money is your responsibility. I'm just a guy on YouTube. Please do your own due diligence and try to make the wisest move. Don't forget to share, like, and subscribe. Many thanks and see you hopefully in the next video. Thank you, bye!